And good evening. This is the Elliott wave update for the S&P 500 from Monday, June 13th, 2022. The downside did continue today. It did really kick into gear on yesterday's Globex opening, and it just followed through today. We did see some buying step in or try to step in the NASDAQ, in the tech stocks. That was pretty wild, but it did basically only provide some really excellent points for short entries. In any case, let's try to update the situation right now and where we're at and what we can start to look forward to. I want to begin by saying again, I have switched the labeling around. What we're looking for now is the completion of a larger C wave, an intermediate degree C wave, and that then will put the finishing touches on primary wave A. So we are progressing lower. We are continuing to move in the direction that was expected and getting towards the completion point of these initial legs down in this longer term corrective phase. If you remember, if we want to just move in the opposite direction, we've got to finish up the intermediate degree, which is going to be an ABC. That's going to put in the A wave within the primary degree, and then we have a B wave and a C wave on the primary degree. That's then going to put in the A wave for the cycle degree, and then we get a cycle B and a cycle C, and then that's going to put in the finishing touches for an super cycle wave 4. So building blocks, bigger, 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 right till we get back up to the completion point. Once cycle wave 4 is over, folks, and it's going to take a while, so we're not even close to that. But once it's over, I'm looking for a super cycle wave 5 advance. So wherever we end up, that's when it's going to really start brewing. That's when all the economic factors will kind of congeal and move us out of whatever that deep hole we have dug ourselves into, and whatever the situation is globally, it'll move right out of that, and we'll go back into a time of expansion, a time of economic growth, a time of recovery, et cetera, et cetera, et cetera. So it's not so bleak. It's just going to get real bleak before we get there. So, but I think that we each get to make a choice here. We can accept the reality of what's happening, be somewhat prepared for it, both trading wise and just what we can expect to happen, and then just be prepared and kind of go with it, because to fight it is not to accept it. If we accept it, it's like it's going to come with a lot less pain. And that's my hope anyway. So back to the S&P. We continue to be within this C wave. And again, the C wave on the intermediate degree is going to consist of 5 waves of minor degree. All C waves under Elliott, he stated, all C waves must be 5 waves. So wherever we find them, they will be 5 waves. Now, within that, we've completed minor wave 1 and minor wave 2. And so we're inside of that minor third wave. Now, what's within inside that minor third wave? 5 waves of minute degree, which I think we likely have done 1 and 2, possibly. Still got to really kind of hang on to the possibility that all of this is just going to be minute wave 1. And then we're just in for a really, really bad tumble lower. So I'm not going there right now. I still think that we're unfolding, and all this is part of the minute wave 3. And within that, I've put a few labeling on here, sub-minute 1, 2, 3, and 4. So we're in that sub-minute wave 5. And that one I really do believe, and it looks like it likely will break 3,700. Maybe get us down here, 3,690. And unless it truly just really extends, and then we still have support underneath that. But we got down to 3,735 at what time? At just before the close. 37.35 was the low today. We have major support supposedly at 37.17, and that I have found many times prior in running different sets of Fibonacci. That 3715, 3750 area, and then on down, continue to be strong support. So right now we get down to 35. I think that we'll be looking very carefully at the 3715 level to, if it's going to put in a low here and maybe put a label on that minute 3, so be it. But here's the kick, that the bounces, even though it would be a minute degree fourth wave once we're done here, putting the third in, the pressure to the sell side has been pretty strong. So all of the bounces have been very small. And if we look at it, it is basically not able to even challenge the 20. That 20 is just walking this whole move down and going totally unchallenged. And now we can see the 50 really picking up steam. And the trajectory is very strong down. Now we're seeing the 200, where the trajectory is now beginning to truly round itself out. Instead of being more of a slow and steady, it's rounding itself out, really putting us in a position where it's like, wow, can we crash? Yes. Oh, this isn't the crash? Maybe not. Part of it? Sure. All of it? I don't think so. So we still have a lot of possibilities for this whole market to just totally fall apart, all within the framework of a minor third wave down. So we continue to see the point of recognition moves, strength, 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 strength to the downside. Those are the points where the flow of the sellers is basically like, yep, we recognize inflation's a problem. The bond market today, in case anybody hadn't noticed, at one point they're up 5 ticks in the aftermarket, but in sincerity, they were down over 3 points today. When we got an announcement that the Fed probably will raise the rate 75 basis points, or 3/4 of a point, and that just seemed to upset everybody's apple cart. It's like, holy cow. Now, what do we got coming for the balance of the week? Let me give you a hint. I'm going to go over to here. I'm going to go to here, and let's take a look. Tomorrow we have PPI, 8:30 a.m. Eastern, 5:30 a.m. Pacific. I would not think that it's going to come in rosy picture-like after we got a CPI that did not come in rosy. I think PPI is going to come in even worse. And that's going to be the next sock in the jaw to the market. Then on Wednesday, we've got the Fed. Their meeting starts tomorrow. And we get that report or their announcement at 2 p.m. Eastern, 11 a.m. Pacific. We also have retail sales tomorrow, Wednesday, excuse me. Then on Thursday, we have housing starts and permits, jobless claims, and the Philly Fed, all marked red, so they are market movers. Then on Friday, we have quadruple witching, options, futures expiration. It's already been thought to have the ability to come in at $3.6 trillion. Settlement, that's what gets settled. Also on top of that, we have industrial production numbers prior to the opening. So we've got a lot of things that are going to have the potential to deliver the old 1-2 punch to the market. So moral of the story, folks, don't try to attempt to pick a bottom. I just don't see how that's going to work out favorably. So what can we look for tomorrow? If I'm taking this as the sub-minute, so within this minute 3, sub-minute 1, 2, 3, 4, we're in that sub-minute wave 5. That's got to break the low at 37.35 before it can be complete. And I'm thinking that it's going to get 37.15, maybe even down below 3,700. And that could all happen tonight. As we roll the markets around and we roll, Globex starts in 5 minutes. So we get that, then we get the Asian markets that open and deal with their own stuff and ours, and then the European markets. It tends to really roll quicker once Europe begins to open. So looking for that. Once we can get that minute 3 in place, then I'm looking for a minute 4th wave. But again, these pullbacks, these bounces, these small counter trend rallies have not challenged the 20. And so I'm feeling that they're going to continue basically to be held by the 4 and the 8. And if that's the case, it's not going to get very far before we roll again in a minute 5th wave down, which likely will subdivide in and of itself and push us towards our ultimate target for minor 3 down here. So all things remain on the table. I am encouraging everybody to please trade what's in front of you. Don't be bullish, don't be bearish. Just trade the movement, trade what is happening within the market. Pick your points, use the moving averages. Like I just said, bounces, although I'd always be looking for something because the volatility is so high. And by the way, we saw vol is now above 34. That's where it closed. And the future is just under. So I'm not looking for anything to really be earth shattering here. I'm looking for to the upside, that is. I'm continuing to look for downside. We need to get that minute 3rd wave in. So first of all, we need to get the sub-minute 5th wave done. That'll complete the minute 3rd wave. Then we get a minute 4th wave, and then we get a minute 5th wave. And we still have 4 days, Tuesday, Wednesday, Thursday, and Friday, of lots of activity, lots of news, lots of nervousness in this market as to how it's going to react and what that news will demonstrate. So there's still plenty going on. And so I intend to trade what's in front of me. I intend to trade each move and see what we get and play it against my moving averages, against the Fibonacci, and against the Elliott. So that's where I'm going to end it. I'm really going to encourage everybody to please trade smart, pick your points, work a trade plan, work your rules, have rules about where you're going to get in, what your targets are, and where you will get out if your trade is invalidated. Hanging on to a trade in a falling market, particularly if you're long, can be deadly, can blow out your account, can produce huge losses very quickly. The S&P was down over 150 points. That's huge for the S&P. Okay, I am going to leave it all there. Wish everybody has a very, very good trading day tomorrow, and our next update will be on Tuesday, the 14th.